Hi friends, this is Ravi Kanth Miriyala. Right, my classes on CA final paper number 1 financial reporting are available on an academy platform. Yeah, these are recorded as well as live, and it is 100% comprehensive and 100% English batch, wherein we discussed each and every concept of Ind AS, which will be useful to the students even after qualification for practice purpose. Also, this will be useful. Yeah, please, inform your friends about this information. And on an academy platform, comprehensive batch on GFRS also is done. 23 classes, 69 hours, entire ICA material with PY examination questions and mock test papers also are covered in this discussion. It will be very much useful for CA final GFR, that is paper number 6E. Next, for my books, that is on Ind AS made easy, our financial reporting made easy, and fast track summary book. Yes, you can order in ravikantmiriyala.com, or you can contact the given number for the books. Right, for your doubts, clarification, please join the Telegram group Ind AS discussion group RKM. These charts are from my book Quick Revision Fast Track Chart Book on Financial Reporting, which is available from my website and in the market. Yeah, the website name is ravikantmiriyala.com. Let's look at Ind AS 2 inventory. Ind AS 2 is exactly equal to Accounting Standard 2, except very minor differences. Those are ignorable for the exam purpose. Yeah. So Ind AS 2 is obviously for inventory valuation, that is your closing stock. This standard is not applicable. This standard is not applicable for financial instrument because you have a separate standard. And if you have any biological assets, that is living animals and living plants has held as a inventory also, then you are supposed to refer your Ind AS 41. Yeah. And what is a measurement? The standard is not applicable for measurement, in the sense, as you know, inventory is measured at cost or NRV, whichever is lower. But here we don't compare it with cost or NRV with respect to agriculture, producer of agriculture. Yes, it is an inventory for them. Producer of agriculture and forest products, if they are holding, that is after harvesting. After harvesting, it will be valued at NRV. We say it is valued at NRV. NRV means what, sir? Whatever the fair market value minus selling cost you have taken it, when it was an agriculture, when it was agriculture produce at the point of harvesting as per Ind AS 41, whatever you measured, it will be measured at, as per Ind AS 41, it will be measured at FMV minus selling cost. The same number will be treated as NRV here. It won't be a different number exactly. Yeah, and if it is from the commodity broker, yeah, trader, then it will be valued at fair market value minus cost to sell. Okay, yeah. Next, what is inventory? Inventory is an asset which is held for sale in the ordinary course of business, or which is used in the process of production, or which is consumed in the process of production. Yeah, which is held for sale means finished goods, which is consumed in the process of production means obviously raw material and work in progress, which is used in the means that is the spare parts and packing material, many other items will be coming here. Yeah, how do you measure? That is cost or fair of cost or NRV, whichever is lower. Yeah, cost, that is actually speaking in your costing terminology, cost is equal to COGS, cost of goods sold. Cost of goods sold means what will be included? It will be including your raw material cost, labor cost, and manufacturing overhead cost, and direct expenditure also. That is exactly same thing here. Cost includes cost of purchase, cost of conversion, and all other expenses which are directly attributable to bring the inventory to the present location and condition. Okay, cost of purchase. What is the cost of purchase, my dear? That is purchase price. A purchase price plus non-refundable taxes and freight cost, and if there is any rebate, you reduce it, and all other expenses directly attributable to bring it to your godown. Okay, and cost of conversion basically includes two things. One is the manufacturing overhead, and the next one is labor. Labor, as you know, it is variable overhead, that is variable, and overhead can be variable, and overhead can be fixed overhead. Right. If it is variable, it should be allocated to it should be allocated per unit based on the actual number of units, that is called actual capacity. If it is a fixed overhead, you should be allocating per unit based on actual capacity or normal capacity, whichever is higher. Based on actual capacity or normal capacity, whichever is higher. It is not based on the normal capacity. That is, normal capacity rule is applicable in case of costing but not in accountancy. And with respect to all other costs, in the sense any development cost you can take it, correct, and designing cost you can take it, and what is that, primary packing material also can be considered here. Yes, and the cost does not include that is general administration overhead, selling and distribution overhead, abnormal losses, and storage cost, I mean go down cost. Whether you keep raw material in it or whether you keep finished goods in it, it is not going to be part and parcel, because of your storage it does not add any value to your, correct. You keep a lot of raw material or you keep a lot of finished goods in your godown, that does not increase any value to your inventory. That's why we don't take it. But storage is the part and parcel of, it's a process of manufacturing the inventory, then storage cost will be taken into cost. Otherwise we do not take it. Next, borrowing cost are also, if the inventory is a qualifying asset as per Ind AS 23 or accounting standard 16, then yes, the borrowing cost are also part of cost. Otherwise it will not be. That means these 5 items are going to be charged to profit and loss as and when you incur it. Okay, right. And now let us look at joint products and byproduct situation. Yeah, joint products, byproduct is the product, which is coming in the process and which value is immaterial. Joint products is value is obviously material. If it is a byproduct, we will be measuring it at NRV, and that NRV will be reduced from the joint cost. Each joint cost is going to be allocated between the joint products. So how do you allocate it? How do you allocate it among the joint products? That is, a standard says it is systematic and rational basis you are supposed to allocate it. What is systematic and rational here? That is nothing but selling price of the joint products immediately after separation. That is the first way. If the selling price of the joint products immediately after separation it is not available, then you have to take it the final product after further processing minus further processing cost ratio, you can take it. If the further processing costs are hardly anything or negligible, then selling price of the joint products after further processing, is supposed to be taken into account. Right. Next small topic is cost formula. Shall I follow FIFO method or LIFO method or some other method? It is depending upon whether the inventory is interchangeable or not. If you say inventory is not interchangeable, it is not interchangeable in the sense it is a customized product or it is like a job costing. So under that circumstance, you are supposed to follow specific identification cost method. What is that? Specific identification cost. Right. If you say yes sir, it is interchangeable, then you can follow FIFO method or weighted average method. That is a choice to you. Whichever method you want to follow, because both are very good methods. But remember, LIFO method is prohibited. You are not supposed to follow LIFO basis. Done. So that's all. No, not that's all. You can follow the standard cost method or retail cost method. But when you are following standard or retail cost method, the management has to review it frequently. That means the standard cost what you fixed in the previous year, does it make sense here in the current year also? You are supposed to check it. Yeah, standard cost is like nothing but an average cost where the management will determine. Retail cost is nothing but normal selling price is how much minus gross profit. Correct. Now selling price minus gross margin, if you cut it, what is left is COGS. COGS is nothing but cost. That's all. With respect to NRV word is basically from the point of view of the seller. It is not from the buyer's perspective. Right. So it is a seller perspective, and so that is applicable basically for the finished goods and WIP. With respect to raw material, it is not applicable. Why not applicable? Because with respect to raw material, the company is always a buyer. NRV word is for a seller. That's why it is never applicable. We don't need to value raw material at NRV even though there is a fall in the market value of raw material. Yeah, we'll discuss about it little later now. So FGNRV, what is it? FGNRV will be selling price, normal selling price minus selling cost, whatever is there that you reduce it, that is NRV of FG. WIP selling price of FG, correct na, selling price of FG minus selling cost minus cost to complete, that is going to be NRV of WIP. Okay, done. With respect to raw material, yeah, what is that? With respect to raw material, valuation of raw material is based on the selling price of the FG. The reason, raw material will be sold not as raw material will be sold right after conversion into FG. So raw material amount recovery will be happening by selling the FG but not by selling the raw material. That's why raw material selling price we don't consider. Okay, so now if you are you able to sell the FG at or above cost? If you say I am selling it at or above cost, then that means raw material amount full recovery is happening, hence raw material should be valued at cost. If you say no sir, I am selling it for loss, that is finished goods are sold, cost is equal to 200 rupees. If you say I am selling it for 180 rupees, that means finished goods are getting sold for cheaper than the cost, then raw material recovery may not be happening. That's why raw material should be valued at replacement cost. Next, that is about NRV related discussion. The cost or NRV, these two numbers you are supposed to compare it each item by item. You should not group it, and you are not supposed to do this. That's it, my dear, about your accounting standard 2. Yeah, if you like this video, please share it with your friends, and right, thank you, wish you the very best.